Welcome, everyone, to this episode of Perpetual Perspectives powered by Vest Exchange. Vest is a novel perpetual futures exchange built on ZK Sync. I'm your host, Stoic, and today I have the pleasure of having with me Luckshury. I've been a huge fan of his content for a long time. I've actually picked up a few things from him myself. He combines price action, order flow, as well as statistics in his trading. A great educator as well. And the way he presents information and the visuals he puts out are extremely aesthetically pleasing. So thank you for sitting down for a discussion with me, Luckshury. And without much delay, let's get right into it. Can you please introduce yourself?
Yes, hello. I'm Luckshury, full-time day trader really since 2019, late 2019, but really on the chart since early 2018, late 2017. So yeah, a bit of a 2-year gap there, to be honest, really to get going. Also, work over at Exo Charts, product manager, admin, everything else kind of over there. Full-time journaler, if I'm going to call it that. I really want to get that part in, and also a avid in silico terminal user. So that is kind of my history, if that helps you out.
Yeah, that's wonderful. And there's a plethora of things that we can really dive into later. But the first thing, and what I want to get into is, what's the story behind your account name on Twitter? I'm curious on how you came about that name.
Yeah, so when I was really young, I think I was like 13, 12. I mean, that's saying I'm 21 now, so that's like 9 years ago. Around that age, I wanted to create like a clothing brand, and I wanted it to be like luxurious, but I didn't want to spell it the way everyone else wanted to spell it, just luxury. So I spell it with like a CKSH, to kind of replicate kind of the X kind of sounding. And then 7, 8, 9 years later, I just put that into my Twitter name, and there we go. And then that's kind of how the L formed to that, and it just kind of to be kind of luck that it looks really nice now in terms of like the L with like the candlesticks and everything. But it was really of luck. A wannabe clothing brand is what I would say, that never came to fruition.
That's really interesting. And it's interesting how it morphed, actually. It fits perfectly in terms of your account and everything. So, you're talking about thinking of having a clothing brand, and what I want to talk about is, how did you get introduced to crypto and trading? What was your first exposure to it? Is there any interesting story behind it? Like, how'd you even get into trading?
So, I mean, I remember the very, very first time I got into it was one of my friends. He's called Ivan, and I'll touch upon him later within this probably interview, because he was like a massive influence to why I started. There was like kind of a trio of us at the time. But he posted something like on his Snapchat. At the time I used Snapchat. Anyone listening, please don't hate me for that. But I was using Snapchat, and he posted something about trading and like looking at the chart and whatnot. And I just remember that being my very first kind of, and I was in the kitchen standing up, and that was like my kind of very first interaction with like, maybe I should try this, like kind of trading thing, because he was a very close friend of mine, and he was looking at it. We'll get into what happened there, but with him, but that was kind of my very first exposure. And then from there onwards, I kind of just jumped onto the chart, a trading view chart. I just typed in what is the best like kind of trading analysis thing, and jumped on trading view as most people would. And then, countless years later, it's where it is now. But definitely, I kind of still look on it and feel like the very, very beginning of like me starting trading was kind of very much luck based. Like, I don't know what happened that day, but there was nothing really, I'd been interested very briefly before, but I never had the urge or anything to be like, I want to do trading. I was doing accounting at the time. And then this just appeared out of nowhere. And all of a sudden, I'll get into like my very first experience. I don't know if you want me to talk about that, but my very first experience with like trading as a whole. But that, I think, was what got me hooked in general, which was I started trading. And this was like, I was trading like the 1 minute chart at the time, and price was just going up. And this was Bitcoin, so price was just going up. I remember for 7 days straight, 20, I think this was, like beginning of 2018, because I didn't trade like when I very first started. It was like a month after, and then it was like I started December 2017 when I looked at a chart, January 2018, and I just like made for 7 days straight. I remember, because I was working as an apprentice accountant. I made $100 for 7 days consecutively, and I was like, that was kind of the buzz that kicked me off. Obviously, I say that now, and I'm like, damn, I made so much money to be, $100 a day every day for 7 days straight. When everybody, and I was like, let's, forget everything I'm doing. I'm doing this. This is the buzz. Little did I know that was, a massive kind of hole in what actually trading was. And I think most people will go through that where they go on that winning streak. And to be honest, now 100% I had not a fucking clue what I was doing at all. And I think we'll get into this later on, but it just shows that the output of your trade is not a measure of what you put into it. But that's kind of like how I got into it, how I found out about trading. My first kind of few trades experience, first week. I think after that it was just a blur, and I'll get into that later. But that first week as a whole was like amazing, and I think that's what got me hooked, to be honest. After the first month of just like kind of looking about for a bit.
Yeah, that's awesome, and it's really interesting. You touch on a few things. I think for a lot of people, it starts off that way: the euphoria and the dopamine that you get from making, whatever amount of money, kind of sucks you into it. And one thing I wanted to ask you, you said you started trading on Bitcoin. Did you look into crypto at all at the time, or was it just something you just fell into because your friend, you mentioned an individual that you said you want to talk about further later on? Did you just fall into it, or why Bitcoin specifically?
That's because what he was looking at. And
Right.
This is something really interesting to say, because I don't know if this is going to hurt most people's feelings, or whatever, but I really don't care about cryptocurrency as a whole. In that sense, I mean, obviously I trade Bitcoin, and we'll get into that, but I don't really care about it. It just ended up being the thing that he was trading, so I wanted to trade that. And that's what I ended up becoming, almost kind of I don't want to say a specialist, because I'm always still improving to this day. But it's mainly what I ended up trading. Obviously, I swivered over to altcoins at one stage, but mainly it was Bitcoin and trying to make money from that. And still to this day, like, I'm not here for the cryptography or stuff like that. I'm really here to make money, and like I've learned a lot about that on the way here, like how to try and make money from this. Yeah, so it's not really a love at all for cryptography or cryptocurrency or anything like that, I would say.
Yeah, and there's no right or wrong way to go about it. I mean, there's a lot of people that are trading just the tickers and don't really have any attachment to the coin. And I think traders should think like that, to be perfectly honest. I mean, if you're an investor, it's just two different things. And it's interesting that you fell into this market because it's so inefficient. A lot of people, obviously pivoted from TradFi to crypto because of the inefficiency and the ability to take advantages of those inefficiencies. Did you ever think about, I mean, I might be jumping the gun a little bit, but did you ever think about going and trading equities, or going to TradFi, like after you kind of learned a little bit about trading, or you just stuck to Bitcoin?
Not really, because that thought did cross my mind. But by the time that had crossed my mind, I kind of had thought, I'm going to have to redo everything. This was like probably a year and a half in. Like when I was crossing the border into profitability to an extent, I was like, maybe I should try this another asset. Then I was like, I'm going to have all this edge that I've kind of crafted for Bitcoin. I'm going to have to find another one for ES or whatever, and then build on that if I wanted to do that. So it never really crossed my mind in that sense to kind of jump ship and do just that, because as we'll get into, like my main aim is like maximizing my performance and like my trading performance and my bottom line. At the time, me jumping and trading something else, more than likely I weighed up the probabilities. I was like, this is not going to increase my bottom line, not within like the next 6 months to 1 year. It's not going to. I think that's something I very much, I see a lot of people online go, look at the thrill of this coin, look at the thrill of this coin. And like, it's moving, everything's moving. But at the end of the day, is, switching ship to trade altcoins as a whole, equities, TradFi, whatever, is it going to increase my bottom line, at the end of the day? And majority of the time, I'd write down, I'd spend a day, 2-3 days thinking about that. And the answer ended up being, not no, like more than likely not. And like if that's the case, then like I'm just going to continue what I'm doing here and continue crafting this. So you know, to answer the question, I didn't really think about it. I mean, I thought about it for days on end, but I never ever jumped the ship on it like that. No.
And this is exactly why I want to bring you on. You talk about probabilities and bottom line, and what I want to get into is how did your mindset develop in this aspect in terms of like from the first time you traded, like you mentioned, you know, you wanted to get into how your trading looked like initially. How has that evolution occurred in terms of how you think currently? And I'm interested in how that process looked like for you.
So like yeah, there's a lot to it in terms of like how it evolved. I would definitely say like number one's journaling. How I came about that, um, it definitely was Trader Dante. I don't you've probably all heard of him, I'm sure.
Of course,
In
the ledge
in
himself.
yeah, in terms of journaling, that aspect came from him, and then like being disciplined with that came from him. But in terms of my actual trading, it definitely the way my trading's evolved has seemed to be cutting down and cutting off all like kind of excess fat. What I mean by that is like almost have is like just increased selectivity. I mean, this is for me, and I know this is not probably what everyone's going to want to hear, but I often found that I was trading way too much in the beginning, way too much in terms of like my trading. Analysis. Obviously, I pivoted down from using all these different indicators and EMAs, and not to say that's useless or anything, but after journaling, I found that these weren't increasing my bottom line performance. I need to focus on cutting down to what it is, and then I was like, okay, I'm gonna have to cut down in terms of like my in terms of my selectivity has to be really higher. So I was cutting down all my trades in terms of like this doesn't work, this doesn't work, this doesn't work, and that all came through like journaling. So I kind of had this aspect of doing so many different ways of analysis, EMAs, different types of structure changes, different time frames, different this, different that. I left too much room for discretion. I left too much room for my brain, who at the time especially was not, if there's too much room for discretion, I would generally fuck things up badly, right? So like making sure everything's really slimmed down, this, making it very, very simple, in terms of like being able to understand what I'm meant to be doing, was a way to increase profitability, because I realized I was making too many mistakes by having this over selective option of trades to be taking. Obviously that then came to like having a plan that fit all of that stuff, simplifying order flow footprint data. But the main aspect of it for me was like journaling, realizing I left too much room for discretion, and then kind of going, I don't need this, I don't need this, I don't need this, maybe I need this, let me go and test this later. Okay, now I've got a set of things I can trade in, and still like that was the way of doing it, was like narrowing it down and almost narrowing it down to like A+ setups only. And I that's a very common term said, but like it's in most of cases, in my opinion, it's very true. But the way you actually get there is very different, because in the very beginning for me, trading all these different indicators and whatnot, slimming that down to then being able to trade 3-4 different setups was very hard mentally to do that. But that is what again would increase the bottom line and allow me to only trade my A+ setups. So yeah, I mean, that's how my trading's evolved. I don't know if I've kind of made that extremely long-winded. There's probably a bit more to it there, but increased selectivity, and I think that's something I learned fully on my own, was that I was doing way too much and leaving myself with way too much room for discretion.
No, that was beautiful actually. And from my understanding, you've tried to eliminate like as much of the discretionary aspect of it, make it as extremely mechanical.
Yes.
Using probabilities. And I had on Cream Trader as well, and he talked about this, like making it as mechanical as possible. And obviously I like to get your take on this as well. Different things work for different people, and I do think there's like an individual aspect to trading as well, in terms of what kind of mindset you have, your psychology and how you operate, because I've seen people do really well just trading price action, and I've also seen people do really well being extremely mechanical. So I'd like to get your take on this, because you're a student of the game. So I'd really like to get your thoughts
exactly, 100%. And I really wanted to talk about this actually, because the number one thing that I think not number one, but it's up there with the number one thing I think most people generally will end up fucking up, is that they go, well, the discretionary trading, there's mechanical trading. And they ended up going and think, oh, well, discretionary trading is kind of easy. I don't have to come up with an edge and all this other stuff. I'm going to take this route, discretionary trading. Mechanical trading is for those that know bots and what all this other stuff. This, first of all, number one thing is discretionary trading does not mean that you don't have a plan. That's number one thing I see in like everywhere is like, I'm a discretionary trader. I trade, price action, all this other stuff. That doesn't mean you don't have a written plan from morning to end to middle of the day plan to end of the day plan, all of this stuff. That doesn't mean, discretionary trading doesn't mean you just randomly look at a chart one day and start trading randomly. You still formulate everything almost not in the same way a mechanical trader would, because they've obviously, tested everything for hours and hours and hours, whatever it may be. But you still have a written plan that you stick to and you go through at the beginning, middle of the day to create some sort of structure, and that's what I'm saying. Like discretionary trading doesn't mean no structure. Like, we'll get into like the probabilities and everything, but because I'm not and I've said this to you as well, mate, that I'm not no engineer, mechanical wizard. I'm good with like Excel spreadsheets, to an extent. Like I'm not amazing, but I'm okay. And that's kind of where my problems go. All my problems that I have during the day, I go, why doesn't this work? And then I take it there and go through it. But yeah, I would classify myself in, I don't want to say a middle ground, because basically the way my execution is discretionary. So this is the way I trade is I have, forming my levels of interest, I have my bias, and I then have, it's like identifying conditions that I go through in my morning plan and my DRC that I've created through Notion for anyone that's actually interested. But like creating the plan itself is like very much discretionary to the aspect of I have a checklist that I go through, all these different aspects, 1 hour pivots, 15-minute pivots, single print ledges, etc., etc., etc. And then I kind of have this section in my daily report card, which is, I would say, mechanical. It is mechanical to an extent, and it's forming bias. Forming bias to the aspect of where do I think price is going to go today? Do I think price is going to move up? And I've kind of created this thing. I don't want to say created at all. But for myself, it's like I've got these high hit rate levels that probably most people see me mentioning, like price has an X percentage chance of moving up to here today, right? And I wouldn't say that's mechanical because I'm not necessarily taking a trade off of that, but identifying my bias for the day is mechanical because because I've back tested those specific levels and whatnot, and I've gone, there's a 78% chance price hits, this level on this day within the next 2 days. Right, that's mechanical. Me trusting that data is more than is mechanical. I trust price will move up to there, and if all my other things don't come into alignment with me taking a long to see price move up to there, then I'm more likely than not going to trade. Right, so I've kind of, I've kind of forgot what the question was, but that's kind of the mechanical and discretionary. Discretionary doesn't mean you don't have a plan. I think that's the number one thing I wanted to really get across there. But I think both of them in general are like really, really, you can do either. But I think, honestly, when someone says they're a mechanical trader, I'm yet to find someone that is a mechanical trader that doesn't have a plan, doesn't do everything I'm basically saying here. It's only people that go, I trade price action, I trade this, I trade all these different altcoins, that fall into this camp of I'm a discretionary trader, I'm going to have no plan. I'm just going to, whichever altcoin's up 20% of the day, I'm going to try and trade that. That's why I'm not really focused too much on the mechanical, because I very rarely see them. I do know someone that is, a few people that actually are, but they never really have those type of issues. They have their plans. They're very good at back testing. They're disciplined in that sense. They have the data to trust. I'm just saying that there is some part to instill the aspect of mechanical in terms of structure, routine, etc., into the aspect of discretionary trading that most people don't. So hopefully that makes sense.
Yeah, no, those were great points. And it's funny, I think I saw something on Twitter. Someone said, I'm too discretionary for my algo friends, but I'm too systematic for my discretionary friends. And I was cracking up. But I think the issue here is people say, oh, I'm a discretionary trader and, I'm not mechanic. But I mean, it's necessary, right? It's necessary to be mechanical in terms of collecting the data to find your edge. Otherwise, it's just you're gambling. It's a casino. But I think the main issue is people are just lazy. They don't understand the amount of work that needs to go on the back end. I mean, for yourself, how many hours have you put into the data collection and looking at the data? And we were having this
Yeah.
conversation offline as well in terms of when you say you're busy with trading, most of your time is being spent, kind of refining that process of collecting the data and looking at certain parameters.
Yeah, like literally a lot of my time is, it's the smallest of details that I realize. I think, as I said, trading has changed me as a trader. I said this to you like a lot, from like last 4 or 5 years. It's changed me a lot because the smallest of details make the biggest of improvements. Like we were saying, that most of my time is, collecting data takes hours and hours of time. I'm doing it all basically manually, the majority of it. Obviously, I'm not saying to shy away from the aspect of doing things mechanically. But for me, I just do it manually, because I'm not, I don't know certain ways to do it and automate all this data. And that will take me, I remember the first time I did this, I sat there for 7, 8, 9 hours, trying to collect this data, back testing it for 2, 3 years. Not a bad idea, looking back on it. Well, not a bad idea, but the way I went about it was because I sat there for 8, 9 hours, and I'm very kind of focused like that. I can sit down for that long and do something. The problem is, like, my brain went like numb, and like that can affect your trading. Everything affects my trading at the end of the day, sleep, everything like that. So like sitting there for 8, 9 hours was horrible, like really bad, because at the end of the day, like when I was looking at the chart at the day, or the spreadsheet at the time, numbers looked like they shouldn't exist. I don't know how to explain it, but numbers didn't look real. So like the moral of the story there is I started just spreading out the way I collected data rather than one sitting. It was those 9 hours were spread out the course of maybe half an hour a day even, and on the weekends I'd put in the extra hours. So I definitely spread it out in that sense. And then also what I was going to say was about, like, I'm busy in the sense of organizing my my plan and stuff like that. Really, something really small, for example, that I adjusted in my plan, that I think made an impact on some, or again, impact on my bottom line, because it's helping me through my morning routine, is like, I had a question of what is the daily time frame doing, and what is price doing from the daily trend, or the trend since the open of the day, right? These two questions, and like just not even altering the questions, but altering where they were in like my daily report card flow. So rather than be too above my checklist, they were below it. And it why was that important? Because that was the last thing I thought about after I exited my checklist. After I exited the daily report card at the time, it wasn't, I'd read it first, then do the checklist, and I would have forgotten about it. Actually putting it at the bottom, I remembered it, then going to the next part. So I think that's really important. Very small details like that I never thought would make a difference really did at the end of the day. So yeah, and I think that's what I really look into a lot, is like the fine details and stuff like that.
Yeah, those are some phenomenal points, Luckshury. And what I want to circle back to, right, is you've probably heard of this effect, the Dunning-Kruger effect, right? Whenever you pick something up, you have the valley of euphoria. You think everything's easy in the beginning, right?
Yes.
You get to this point where you think you know it all, and then you realize, you go into the valley of despair, and then you if you stick to it, you slowly grind up in terms of learning how much the more you understand, the more you know, the more you understand how much you don't know. So I want to get your take on this. How did that look like for you? Did you have that valley of despair where you were like, fuck, like this is actually a lot harder than I thought it was? And how did you adjust to that? Like, how did that mind, like, I'm just interested in learning how your mental framework changed in that sense.
Well, I guess this brings to a point where I was on that streak of winning in the very beginning. I don't want to say, because this was very beginning, so I don't want to say this came too quick, that the value of euphoria and stuff like that, like what I thought was going on. But I remember my friend Ivan, who got me into it, he lost $2,000 at the time, and at the time that was like a lot of money to him, to like just lose there. I'll say this now, he hasn't traded ever since that day, like to this day to now, like he's never traded again. And I think it was at that point where I was like, this is not going to be easy to get through, because at the time, I was trading with like no risk management. We were in the same trade, and I was a few dollars, away from being liquidated when he got liquidated. I was like $30 or $20 away from being liquidated, and I didn't get liquidated. It just bounced back, and I actually broke even on that the exact trade.
You got
You
lucky.
know,
$10.
yeah, exactly, 100% lucky. And it was at that day that I kind of realized I was literally a few dollars away from losing this entire account. That can't happen again, and there must be, there's a massive mountain to climb here to do this like consistently and make money from it. Obviously that's like very much early on in the days, but I would also refer more to like going through everything. You do get to a point where I will say, but I'll talk about my struggles in a minute, or I could talk about it in a second. But like where you end up strategy hopping, where I'm jumping from strategy to strategy, and it's not working, and it was when there was a point in time where I journaled, and because I didn't just instantly jump on journaling and become profitable. That's not how it works, and that's not how I want to promote journaling. What happened was I jumped on journaling, realized I wasn't profitable, and then realized, shit, I have a lot of work to do. Something's going wrong, because I was just doing the exact same thing and I just journaled it, and I was like, this isn't working, clearly. And it was at that point, I was like, okay, now I have to like really start finding everything up, because I think for me, trading is it's actually a lot more than just, it's obviously planning, journaling, and trading, but it really expands out to the rest of the way my life is. The way I, for example, on my actual daily report card, I've got, am I actually emotionally okay to trade today? I asked myself that, because although we're all like, most of us are grown men, there's also women in this, so I don't want to say that, but there's also, we're all grown men basically. And I always ask myself the question, am I actually emotionally ready to trade today? And it might be a silly question to write down, but in the heat of things, I can't answer that question without actually seeing it there. I don't take the time back to think, there's a lot gone on today, am I actually okay to trade? And that's kind of when my brain resets and goes, okay, yeah, this and this has happened, it's probably not a good idea to trade today. Why is that good? Well, I've just saved myself, hitting my day stop on the day, losing 3R, and saving my bottom line. Again, very small details from literally just asking myself, am I emotionally, physically okay to trade today? Increasing my bottom line, like writing it down, asking myself the question every time before I take a trade, before I start the trading day, is extremely important.
Yeah, so I don't know if you've read this book, Trading in the Zone, but there's a quote in it that I really like. It goes something like, randomness is unstructured freedom without responsibility, right? And so that's how I see it. Like, you need to create that structure, right?
Yeah.
And being specific, I mean, there's people who even track what they're eating and how it impacts, because your psychology and the way you think and what's going on in your life. And even, I mean, Trading Zone, it talks, in other books, it talks about how, we don't need to get into like all of that stuff, but it's like how you grew up and how you see risk versus reward, and how you look at dopamine and instant gratification, which I think instant gratification in this day and age is, extremely rampant. And I want to talk to you about this as well. Like, how did you get out of that instant because a lot of people fall into this trap when trading. Anyone listening, I hope you listen in carefully, is how did you approach trading in that sense? Like, a lot of people fall into it in terms of the instant gratification aspect of it, instead of looking at it as a marathon and a system that you need to build and improve upon. So what are your thoughts on that?
That's a good question. Honestly, I would say that because I had seen, and that's a hard question to answer for me, because personally, the honest answer, I'm just thinking, I don't want to give you like a bullshit answer or anything. The honest answer is it comes naturally from everything that I've watched and seen. People come and go extremely quickly in this, hunting 50x, 100x gains, right? That to me, that is, I'm not saying that's great for them if they're hitting that, but that's more instant gratification, and I've never been really about, I don't want to say I've never been about it, but I've always kind of looked at trading in the long run, in the aspect of, if I journal my trades, because I've known how hard, this is the way it is. because I've known how hard trading actually is from, I feel like quite a while now, I know how hard it is, like really hard it is. Like I can't really put it into words how hard it is and how many times I've seen people fail. That I almost view it as impossible to gain
Thank
instant
you.
gratification from this.
Thank you.
I,
Yes.
yeah, I almost find it impossible to find a way for someone to realize that it's like it doesn't exist. It can't be possible that there's instant gratification from this. You know what I mean? So I have to view it in the long run, otherwise I will fail. So I think that's like kind of the real answer to it. I don't think there was something I did that made me view it in the long run, because I don't think I was ever looking for, very quick gains, very, I looked for money in the beginning, but I was never over exuberant with it, in that sense.
This is why I wanted to have this conversation. I was actually coming to this. I was going to tell you to let people know how difficult trading really is, and because there's so much content out there right now, there's a lot of garbage, and it represents trading to be like a joke, right?
Yeah.
And people come in not knowing. I mean, they're just misinformed. And they think they can make some extra cash and take $1,000 and make it into $1,000,000 or whatever ridiculous things are going around currently. They don't understand how difficult trading is. Like, it's
I mean,
extremely difficult. The
I mean,
odds are against you in every form. Sorry, go ahead.
100%. I was going to say, like, the amount of, I've taught some people and mentoring and stuff like that. And like the number one thing I'll say to people is, if I'll tell you this because people will be listening now. If they honestly think that they can trade without a plan or without a journal, you might as well quit now. Like, you should really quit today, now, this second, in my opinion. I haven't seen it done before. I might be wrong, but from everyone that I've seen, I haven't seen it done before. Where someone just randomly clicks and they do it full time for a living. And I'm not saying, because what I mean by profitable is, I'm not saying do it for 1 month or 1 month, 2-3 months. Do it for a year. Do it for 2 years of not spot holdings or nothing like that. I'm talking trading without a plan, without a journal. Be profitable for a whole year, 2 years, 3, 5. I don't want to be here. I don't want to be trading for the next 2 years. I want to be trading and leveling up my wealth for the next 10, 20, 30 years. And if I think I can get through that without a journal, without a plan, I'm really being naive and stupid. Is kind of the way I like to view it. It's like they must have. I just haven't seen it, and I'm, and that's just kind of the instant gratification part. Is that I personally think that the way I view it is that most people that don't journal are the ones that are still on that instant gratification that we just spoke about. So journal, plan, routine, some sort of system. It doesn't, not mechanical. I think mechanical, the word system and mechanical, those two words there, they get mixed up a lot, but they're very different. Mechanical trading, is different from having a system as a discretionary trader. You can still have a system as a discretionary trader, at least from what I've learned and what I've done. I think that's very important to note. Have a system in some sense.
Yeah, 100%. And so you were talking about consistently being profitable. I mean, there's no hard and sharp answer for this, but you're an educator. You talk to people as well. You've taught people. How long would you say it takes someone to be consistently profitable with the right mindset if they journaled? Like, I mean, I know there's no real answer for it, but just to give people a sense of how long it might take for you to start being consistently profitable.
Um, I would say with the right mindset, it can be done in a year. It can be done in a year. It can be done in a year and a half. It just depends on how you review your data and how you act upon that reviewment. So like, how do you problem solve, how you problem solve. You review your data, you problem solve, you test again, you go, that's literally it. You trade, you review, you test, you problem solve. That's kind of trading for me, in like a kind of an overview, is that kind of thing. I think it can be done in a year and a half with the right mindset. I think that's possible. 2 years, I'm talking early stages, like a year and a half, 2 years. I think that's quick, but it's definitely possible. It's definitely possible to have that, consistently locked up in a year and a half or two.
Yeah, I completely agree with that. And pivoting a little bit in terms of your own trading, So you're a specialist when it comes to Bitcoin, right? I mean, you look at the nuances, and there's conversation around being a specialist on a few assets or one asset for that matter,
Hmm.
understanding the nuances really deeply for the assets that you trade, versus there's a conversation about people being more of generalists and trading, any ticker when it shows certain parameters or behaviors. What is your take on that? Do you think one is better than the other, or it just depend? It's just individual in nature.
I think that's such a good question. Um, First of all, I do what is best for my trading performance. I don't think the majority of people do that. That's why I think it's a big problem. I'm not saying at all to not trade altcoins. I know many people, and I'm not against altcoins or anything like that. Trade all these different tickers as you please, as you want, right? But does it increase your trading performance? Test it out. Does only trading 2 or 3 of the 12 tickers that you're already looking at increase your trading performance via your journal? Um, if it doesn't, if it doesn't increase trading performance, and trading the 12 is maximizing that trading performance and your bottom line and everything, then like continue doing so. But if trading 3 or 2 or 1 even increases it even just by 5%, doesn't that make sense to trade one to reduce and be even more selective? So I'm not against at all the idea of trading these different coins, trading different tickers, or trading one pair. I don't think there's one is the best and one isn't. I just think that the majority of people who try trading all these different coins haven't tried narrowing down to 2 or 3 and finding out if that improves their trading performance. I think that's extremely important. And like I said again, that for me, that I had that stage where I went to trade all these alts, and I was like, this isn't increasing my trading performance; it's actually reducing it. And again, it came down to being more selective and just nailing it down to that one. Um, I don't, like I said, I just don't think most people do, that kind of testing. Um, but again, like I said, you can trade all of them as long as, in my opinion, it's increasing your trading performance and helping your bottom line. But most people don't do that. So, like, I'm very happy for some people that trade alts and they're extremely profitable. But even one of my friends, I know someone online. I don't, I won't show his name because I don't know if he will allow me to, but he trades many alts. And I just said, try nail it. Just do it a 2 week, 3 week test for me of like just looking and seeing what would your performance be if you only traded these 5 pairs of your 30. So he was trading 30 pairs, nailing it down to 30. It actually increases performance by 2%. But what he realized, so it only increased it by like 2%. There was like not much of a difference. It was a slight, very, very small increase. But what he realized was he's just taken 25 tickers that he doesn't have to monitor anymore off his books, slim it down, cut off the fat, and he can nail down on like 5 tickers now. And that's all he has to do. So it's like less stress, more time to journal, more time to review those 5 tickers, more time to hone in on the edge. So again, like I said, and he's a very profitable trader to this day. And I don't think there's a way of saying that this one's good for you and this one isn't. You really have to go out there and test and then find out, because I'm not coin bias, ticker bias, or anything. I'm purely here, like I probably said at the beginning, to kind of make money. And if making money means I trade one, I'm going to do that way. If I'm going to make money by trading 40, trust me, I'll try and trade 40. If trading more tickers meant I'm going to make way more money, I'm going to do that. But from my testing and my personal testing, it doesn't. And the only way you can find out for yourself is if you actually end up testing, journaling, etc. for yourself. And that's what, like you said yourself, mate, most people are lazy and they won't do that.
Yeah, that's such a great answer. That's such a great answer. And follow-on question is, if people haven't realized up to now, but I still want to ask you this: could you describe your edge in a sentence or two at a high level?
Yes. Okay. I plan out internal liquidity levels, and I look for those internal liquidity levels to be taken throughout a day, where I can then target a high hit rate level, which I have previously tested, to have a really high hit rate on that given day. If that's on like 1 or 2 sentences, I think basically I trade internal liquidity the majority of the time.
Yeah, no, that's spot on. So, if for someone listening in, how would you describe internal liquidity?
Well, for me, this is kind of where the discretionary part comes into it, where obviously you're going to have major pivots of highs and lows. I do have internal liquidity. So internal liquidity that I look for, I look for swing pivots using a fractals indicator that I use, which we'll go into in a second if you want. Um, but then I look for like where there's consecutive higher lows before like a massive drop off. So it's like last two internal swing points before a gap in price action. So you're taking internal liquidity where most people aren't expecting it to be taken. And then it obviously gets taken, you can get a potential move and then target like a really high hit rate level. So yeah, internal liquidity, basically not at very big, high major pivots that most people are looking at. If I see someone like mark out a major pivot, it's probably not internal because I really noticed that most people do not pay attention to like internal pivots very much. So you obviously got like swing points like that. You then have like poor highs and poor lows. They are mainly, a lot of the time, they end up being internal pivots that you can look for swing failure patterns from. And that's kind of what I didn't just become like a specialist in. I don't want to say specialist because of that, but I didn't just really hone in on Bitcoin, but I honed in on swing failure patterns at some stage because and everyone was taking every single swing failure pattern ever taken. And so was I at some stage. But it was like, okay, how do I become really good at this? At which levels do these really occur where I can really craft in on my edge and notice a difference? And it was internal pivots, internal liquidity points. And that's where I then start, creating a system around that and taking only trades once they hit those type of levels. And then using high hit rate levels for like directional bias, so as well as structure on the occasion. So yeah.
It's interesting you talk about internal liquidity and the way you're talking about this because I honestly haven't seen anyone else talk about it in this manner. What I want to, we'll come back to that. We'll come back to that as well. But what I want to actually ask you as well is what indicators and tools and platforms do you use?
Indicators, tools, and okay. So platform wise, TradingView for all my analysis, Exo charts. I'm obviously work there, but this is like non-biased. The only reason I work there and like I work with the team there is literally because I like the product so much. I spoke to them and was like, I want some features added. Exo charts for like order flow, footprint, market profile. Obviously Exo charts is paid. If you do want something for free, you can. If you want market profile, you can get that on TradingView now with like an upgraded plan. I believe it's not free, but it's you get a few other things there as well. For journaling, I use Coin Market Manager or TradeStream. Those two there. They're automated. Again, do not just like leave it there. I would recommend creating a system to tag all your trades, a very rigid system to tag all your trades and then track them later and review them for better info on yourself. And then what do we have? I think I use Notion for my daily report card. So I write up my daily report cards all on Notion. It's a whole template. I'm hoping I didn't mess anything there, but I don't really use that much. There are a few sites and stuff, but that's like kind of the bulk of things that I use in terms of like softwares and platforms. Did I say Silico Terminal? Because that's what I use for execution. So I definitely, that's one of the big things I use. I use Silico Terminal for executing my trades, but that's the main bulk of everything there in that sense. And then I've obviously got like indicators. I'm very slim on indicators. And when I say indicators, like they're very natural. So I use, it's called Pivotal Moments by Alistair. The guy made it for me, so props to him. I use that one, and then I use a daily high and low indicator just to show me where each individual day's highs and lows have been. But they're very basic indicators, and then the rest are actually a few from Leviathan. So I use the relative volume one. A lot of people probably see this on my chart, and it's like the colored candles where you see spikes in volume. So for anyone listening, those are the indicators. I don't really use anything else. I'm very lean on that stuff. I barely use like 7, 8, 9 different things. I on the occasion will put on the chart VWAP, but that's more just for like trade management and things. I won't really execute ever off of VWAP. It's not part of my system. So yeah, like those are the tools and indicators I use. I'm kind of very slim on everything. I mean, like I said, kind of the theme of this is like selectivity. I did used to use like, I know there's trading. I know there's Trading Light. There's all these different platforms. I'm not saying they're bad at all by any means. Just did it fit my plan? Did it fit my routine? Did it fit into my system in any way at the time? No, it didn't. Okay, cut it out. And put this in. So there's all these. I mean, I see this around a lot. A lot of people using all these different tools. Not saying they're bad at all, but just ask yourself: does it really fit your plan or system, or are you just looking at it randomly and going, "There's a buy wall," or I think that's really important to have, like where you sit down and reflect: is what I'm actually using useful, or am I just looking at it for the sake of it? Because that's what I was doing. I'm not going to shy away from that. That's what I was doing in the very beginning, and that's where I kind of made the mistake.
Yeah, so thank you for sharing that. And what I want to get into a little bit is, the parameters that you use on Exo. So you talk about, correct me if I'm wrong, but from what I've seen, min and max delta, and you talk about trap delta. Can you
Yes.
can you elaborate on that a little bit?
Oh yeah, I'm really glad you asked me that. I'll describe it. So obviously, I think there's the term delta that is kind of like thrown around a lot. Delta. So delta is what is the candle. So for example, in most cases, what is the candle once it's closed? Like what is buys minus sells once the candle has closed? Delta. I actually refer to it as final delta because within the candle, there's a lot of stuff moving before the candle closes, and you get a final delta value, which is what everyone just refers to as delta, right? And then you're going to have delta minimum and delta maximum. So delta minimum is like the most amount of contracts sold. I'm sorry about this notifications.
No, that's perfectly
most,
fine. Yeah.
the most amount of contracts sold into a level, and then delta max is most amount of contracts, bought, for example. So it's got a delta max, delta minimum, and a final delta. And I like to look for discrepancies. So for example, if I'm at a low, if I'm looking to long, because like I said, I kind of specialize in swing failure patterns to an extent. And if price is at a low and you see the final delta candle is like minus 4 million and the delta minimum is like minus 32 million, right? Just extravagant example. That means the delta within that candle had dropped all the way to minus 32 million before climbing all the way back up to minus 4 million, leaving behind all that kind of those trapped sellers behind. So it's kind of that concept of, most people just look at the delta and be like, there's this amount of sellers within the candle, but they won't take into account like the delta max and minimum where there could be a discrepancy. And that's where really the trap traders are, where what is the delta, the final delta, at the highs, delta versus delta max, at the lows, delta versus delta minimum. So you can then compare and go, there's a massive discrepancy here between what the delta is and what the delta max was at the high. That's a lot of trap buyers potentially, again, depending on your open interest. Because it might be positions closing, it might be positions opening. You don't know unless you're looking at open interest. But it's people getting stopped out or new people buying is preferred, because that's really great to see. And then, you can even go a step further. I know I'm kind of diving a bit, maybe a little bit complex here, but then you can look at
get into it.
You've got these trap traders, which is like 3 point. You could have 20 million trap traders, but those 20 million trap traders, are they small traders or are they big traders? And you can use T size on Exo to separate and view each trade size group's delta. So I can then go, okay, the largest trade size people, the largest, trade group is mainly buying within this or mainly selling within this candle. So they're the most, those are actually the largest traders are making up the bulk majority of the trap traders within this candle. That is great to see, especially at a level of interest, following all my plans and everything. That is what I really like to see for executing a trade. It's like separating it into like, is there a discrepancy? And then, okay, there is a discrepancy. Who's making up that discrepancy? Is it large traders or is it smaller traders? That second part to it is not 100% necessary, but it's just something I've liked to add on more recently within the last few months or so. But yes, definitely like that delta discrepancy is really, really powerful for me. And visualizing that and looking at that.
Yeah, for anyone listening, and this is beautiful. And what I want to ask you, and let me know if you can't share this, but what I, there's obviously a threshold, and you have your kind of your statistics and to
Mhm.
determine when there's enough trap traders or what that threshold is. Have you seen that change when the regime is changing, like between when it was like a couple of months ago when we were fairly range bound versus when we are trending?
I wouldn't say I look at it in the sense of, well, so for example, actually, I'll talk about this. If you're looking at a time-based chart, so like a 15-minute, 5-minute chart, it's actually a lot harder to compare trapped delta within each individual candle, because it's kind of then relative. Whereas if I'm looking at, for example, like a tick chart, then it's each candle is representing a certain amount of trades. So then the data is like much more, it's much easier to compare each candle because you're then looking at kind of subsequent comparable data, all relating to each other because they've got a common denominator. And then it's easy to compare. So I wouldn't say, for example, especially when I'm looking at a trap traders chart, that it has to be, especially if I'm looking at a time-based chart, that it has to be a certain value of trap traders, right? But when I'm looking at a tick chart, for example, then I can quantify it into a number and go, okay, I need to see a discrepancy of 4 million plus for it to be like an instant execution trade upon candle close. But if it's like less than a certain amount, then I'll have to wait for another thing to occur. Um, I found that really useful. So actually switching more recently from execution on some execution to a tick chart, because it's actually easier to compare trap traders because there's a common denominator. Um, and I hope I didn't lose people there because I
Yeah, yeah.
tried to
No, no, no.
explain.
Yeah, you might have lost some people. So just give them a little maybe a definition of what a tick chart is. I mean, you provide a lot. Anyone listening in, go follow Luxury. He provides phenomenal educational content. But just for
Yes.
the information of anyone who's listening, and if you could just give them a brief description of what a tick chart is.
So a tick chart is the amount, in simple terms, the amount of trades within a single can. It's basically trades per can. So every time a certain amount of trades occur, a new candle prints. Now, something to remember. The only thing I'd want to mention on tick charts is that trade count doesn't refer to volume, right? So, for example, if we're taking a 200 tick chart, that doesn't mean it's going to be 200 volume, right? 200 trades would have occurred, but that 200 trades could produce 5 million volume. It could produce 1 million volume. It's not exact to volume because one trade might have a higher volume transaction than another. So it's just purely trade count and not volume. So that's really interesting to see as well. Um, so if that makes sense to everyone, just trade count, tick size, tick chart, you could just refer to as trade count before, trades per candle, if you want to call it that.
Yeah, there you go. Yeah, trades per candle. So I think it's pretty straightforward. Tick chart
Yeah.
just trades per candle, because so many people are just used to viewing, a time chart. I think this is a different bit, a bit of a shift. But I really urge you. It also depends on the style that you trade, right? So what I wanted to ask, to give some context to anyone listening in, is what's your average hold time? When it comes to trading.
That's good. Good question. Usually, I would say on average, I can even think. Look here quickly. Average hold time is 4 hours. Roughly 4 hours. Um, so I'm not really in and out, but I'm very
Interesting. Very
yeah.
interesting. I thought there'd be a lot quicker than that, actually.
It depends. Okay, so this is hold time. Yeah, okay. Average hold time on my winning trades is around 4 hours.
Right.
On my
Interesting.
losing trades, it's around 4 minutes. Right.
Mm.
So if I'm
Okay, so that's
actually wrong
good.
on a trade, I'm wrong very quickly, which is very good to know. Um, because if something's going on for more than 5, 6, 7+ minutes, I'm likely just to hold the trade because I know, through my stats, I'm more likely to be a winner. Um, which is really interesting to note. So I'm not really in and out of trades very quickly because, again, I spend a lot of time coming up with high hit rate levels, which actually, this is why my hold time is really high. Actually, is definitely because of my high hit rate levels. Because, for example, I might take a long trade at the beginning of within New York session, and I go, this high hit rate level I'm targeting on this trade is 4 or 5% away. And I've done my stats on it, and I really have held off on a lot of trades like beyond certain TPs because I know where my high hit rate level is and like the chance of it getting hit as well. So like I would hold on to it, therefore leading into a lot, you know, a longer hold time, and then also leading on to like a higher R. That was like that was kind of why I had these high hit rate levels kind of made, well, not made, but I kind of configured them, was so that I know, you know, what my actual, you know, how can I actually increase my R, was through this, and like actually give myself trade targets rather than just going, I'm going to close out this more recent swing high, or this swing high here, and I just kept going through like random stages of trade management. Whereas if I have these like, this level is going to get hit today, 84% chance, right? I'm not, you know, there's still a 16% chance it doesn't, and that has actually, you know, that's haunted me sometimes on the occasion, but most of the time it just leads to higher R multiple trades and more conviction. When I'm actually trade managing, I don't just close out the trade so quickly, leading into a higher R and again increased performance overall. So because I had a problem with like you know, getting in, locking it in for a winner, you know, closing it, and that kind of fumble really messed me up for a while. So it then kind of was about how can I actually better my R multiple, and that was through like the high hit rate levels and stuff. So that's kind of how it all went about, to be honest with you.
Yes, that's really interesting. So, you know, I would think your average hold time would be less, but that's, you know, it's 4 hours. But also, I think for anyone listening in, it's the important thing is how quickly you're wrong, right? And you want to be in
Yes.
that boat. You want to cut losing positions as quick as possible on invalidation. And I think the fact that, you know, your average, you know, losers are basically 4 minutes shows that, you know, you, with the data collection, you know, how much it benefits you in terms of how quickly you can cut trades
Yeah,
when they're going the other direction.
definitely. And I think a lot of this stuff comes from me going back on exocharts, replaying my trades, because it's got exocharts as a replay function where I can go back and replay like order flow and footprint data in real time, essentially, and then go, look, there's, you know, this is what happens if all my losing trades in the past have happened because this XYZ has happened. If this happens again, I'm going to close it out immediately, and I'll just close it out rather than just holding and hoping or whatever. I'll just close it out quicker than just like waiting for the whole trade, you know, the low or whatever to be taken. I would go back, review the data, and that's something I did even more recently. Was like go back, review the data, what happened on my losers, right? Okay, going forward, I can cut my losers a bit quicker by doing that. You know, rather than it being a -1R every trade, it can be like a -0.6 or 0.7R. That's seriously marginal gains at that point. You know, I say that it's like 0.3R, 0.4R here or there. All of a sudden, like that's thousands of dollars in value. You know, because that's what R is at the end of the day, is money. So that's kind of how that ended up, you know, going about things in terms of like just tracking my losing trades and tracking like the order flow and the footprint and going back and reviewing it. So then go, okay, what am I not going to do next time? Or what am I going to do next time if this happens, and doing that. So
Yeah, so you bring up a great point. So it sounds like your execution is basically order flow based, right? I mean, what do you think
yes.
about stops and move or take profit levels and all of that? It sounds like you're basically looking at the order flow and closing out or taking profit, you know, partially based
Yeah.
on that.
Yeah, I mean, a lot of the time, I mean, I'm entering my trade as close as possible to like where I'd be wrong on the idea of price moving up or down. So, for example, I've mainly spoke about SFPs because that's what I mainly specialize in, if I want to call it that, internal ones at least, because not many people look at those. So it's like swing failure patterns, the entry, 15-minute, 5-minute swing failure pattern, enter. But the order flow within that candle is extremely important. You know, it could be an SFP, but if there isn't a spike in volume, if there isn't liquidations, I don't enter. And my invalidation is typically below or above the high or low. Now, I obviously had the issue of like just, I'm just thinking how to word it. I had the issue of just like closing, you know, entering a trade, hitting TP1. I've got 60, you know, I've taken off like 70% and I've not even hit 1R. This was like a massive realization when I started journaling, was that I would, you know, my R multiple, my average winners versus averages was like, it was too fucked up. And that's because I was, not because of my winners, like, you know, I could have had like a 50/50 win rate at the time, but my winners, I was just taking profits so much, so quickly, just because it's a free trade now that I'm winning. And that idea really is incorrect. I really had to manage that through the evolving R concept. I'd recommend anyone go read or look at Trader Dante's evolving R concept. Go and do that. But overall, it was just like, how do I increase my R multiple? And that was through the high hit rate levels of like having a specified target backed by statistics. Because it's very hard for me to enter a trade, for example, and go, look, that, you know, that lot, I'm going to target that lot, that last previous high, because that's got an 80% hit rate. It's very hard to do that because that's not replicatable, you know. Whereas if I go, well, look, that London high's got a 94% chance of being hit today, that's very replicate. I can replicate that each day and go, okay, that's a level I can target each day if I've got the stats backed on it. So rather than holding to the last previous high, the last VWAP, tap, whatever it may be, it was a structured, replicatable level that I could just go, you know, this has got a nice chance of being hit because I've tested it previously. So that's the way I did it. And honestly, I would, you know, I struggle to say any other way, because that's kind of what I jumped from at just cutting my trades, you know, well, cutting my winners too early to immediately just to doing this. And like, I saw a massive improvement in my R multiple, because when you have, you know, I think this is something I wanted to mention was, everyone knows about this, the 80% setup. The reason that's set up is called the 80% setup and people love it so much is because it's got a stat behind it. It's backed and people like that conviction and confidence in it. That's the same kind of and I was like, this is kind of what my stats came from as well, was that is a stat that everyone loves. 80% setup, you know, the value area high to value area low. It's amazing. First of all, I want to say to anyone that looking at that setup, please do your testing on it. I can tell you now, it's not 80%. Second of all, if I have that conviction when I'm trade managing or having a bias for the day, like that level of conviction is so good. Like, imagine when someone listening to this right now, imagine you're in a trade right now and you know there's an 84% chance that this level is going to be hit. You're not going to close it beyond the way. Like, you will just have discipline. You will, you know, you won't fuck with it as much. Like, you won't do this. It's same as like these 80% setups and whatnot. You don't fuck with it because it's got the stat behind it. Therefore, you have conviction in your brain. Therefore, you have discipline because of the conviction. So it's kind of like that circle of like having conviction. How do I have conviction and discipline? And that was through gathering these stats on high hit rate levels for the trade management to increase my R multiple. So that's hopefully that kind of answers your question.
Yeah, thank you for sharing that really detailed answer. And we've touched on this throughout this this discussion, but can you talk about your data collection statistics a little bit more in terms of the mindset that you approach the process from?
Yeah. I mean, the way I go about it is I'll have questions throughout the beginning of the day or end of the day. Again, this is from Trader Dante, kind of that aspect of, if I have a problem or something I want to troubleshoot, I'll write it down in a book. You know, I've got like a written journal here. I write it down, or I write it, you know, on my computer on Notion, to go and test something that I find interesting. You know, whether that be from Twitter, from my own note, whatever it may be, I might find it interesting. Someone on Twitter that I completely disagree with post something, and I might go, okay, that's interesting. I'm going to come back to that on the weekend, and going from there. So an example would be, I'll always talk about the London high low. This is something I've collected. I've collected so much data. I could like really talk about this for ages, but like I'll talk about curating my own custom sessions. So I have custom sessions, which is obviously everyone's got the session. Then you got New York, London, Asia, all of that stuff. But my reality was that if everyone's using the same sessions, is there really an edge behind this? Right? Is there an edge behind this? And I'm not saying there isn't, but I was like, okay, there might be an edge elsewhere. So how can I curate my own kind of session times that adhere to this? So I went back and I went, okay, what is the average volume on each single day at each single hour? So I'd basically go through the chart and go, okay, the average volume from 0 to 6 a.m. is, you know, it peaks at this time and it drops off here. Okay, when it starts to peak again, that's when the new session starts. And that's kind of how I created my Asia, London, New York close sessions, was through that. And that's why my New York session starts 2.5 hours before, or no, an hour and a half before most people, which is like 12 p.m. UTC rather than 1:30 p.m. So that's one of the things I did. The other thing I did was, which session puts in the high and low for each day, right? This was like another question for me, because I found out that this is another thing. okay, so my brain just works in like reverse order of, I have a problem, how do I solve it? My problem was, I wake up and I want to trade, okay, and I want to trade reversals because I'm trading swing failure patterns, and I was trading London session and I was losing. And I was like, okay, well, I'm trading reversals, I'm trading London session, and my hold time's really high. So, all of that means that I'm basically trying to predict the low of the day. I'm trying to predict the low of the day because my whole time, the likelihood is I don't get stopped down on that trade. So that's the low of the day or the high of the day. So, and I'm trading within London session at the time. And I was like, does this make sense? Which session is the best for putting in, the high and low of the day? So I went back and tested, okay, which session put in the high on this day and the low. So I'll just go through on my Google Sheets, literally manually. For anyone that is interested, manually, go back 3 years in time on data. You don't really need anything. Go back on the hourly chart. You might need like trading view subscription to view all the data, but you can go back and go, look, this session put in the high here, the low here, this session, and go through. And over the course of 2-3 weeks, you can gather all the data and go, New York puts in the session in the session high the majority of the time, most days, like 60+% chance. Okay, that's something I should definitely take into account. London is the lowest. I need to cut out trading London session now. So I've cut out trading London session in that sense because, again, like I said, I reverse for the sake of I'm basically trying to time reversals. So why am I trading a session which never puts in the high or low of the day, apart from a certain day which has like a bit of an outlier, which makes sense to potentially trade if there's certain circumstances towards it. So again, cutting off that fat and only trading New York session or Asia session or close session if possible would make sense, again, to improve my bottom line because I'm removing bad trades that were typically losers from London session, again, through stats. And that's just, by process of elimination at that stage, that it would make sense to not trade London session. Those are a few things. And then I actually did something else, which was, okay, I'm starting to look at different pairs. What's the likelihood of Asia putting in the high and London putting in the low on this day? And I went through and I looked at all the different combination types for which is the most common. I haven't actually found an edge with that yet. That's just common truth. But that's the thing, not everything I've done creates an edge. It's a lot of different things. And then finding this is interesting, that is interesting. I still might be able to find an edge through that. But right now there isn't. But, for anyone interested, I've created the sessions, high is in Asia, low is in New York. Okay, that's AN. Right, and then going through Asia, London. Okay, what's the likelihood that happens on this day, on this day, on this day? And like, if I can, I'll just quickly find this on my setup. I apologize for this. Right, it was like, so New York putting in the high of the day, Asia putting in the low of the day was like the highest one occurring. Right, so New York high, Asia low was like the highest probability of occurring, and there was some which were like extremely low. So like using that again to my advantage, there's there's really small elements to it like that, but I would really say most of the time, it just these stats are like extremely useful for like process of elimination, not trading certain things that I thought were useful that clearly aren't, and so on and so forth, like the high hit rate levels. For example, again, if this is something else I did actually. I'll talk about this where I basically was like, okay, Asia session, London session, New York close. That's kind of the structure. It's Asia, London, New York close. When it gets to New York session, if London session has put in the developing high or low of the day, so let's say Asia's put in the low, it's trending up, London's put in the high, and then New York started. What's the likelihood that New York takes out London high, on this day? That's interesting. That happens a lot. One of the days I found was significantly higher than all of the other days. And that is a massive part. Again, it's part of my plan, part of my routine to check that now. So it's like sessions, custom things, custom different levels, again, to then go, okay, well, I can now use London high, London low as a target. And really different things like that. I mean, I obviously haven't, we had a chat before about, customizing your sessions in different ways that most people don't think about that you can do, but a lot of it is sessions based. There are certain things based on equilibriums. Something I can just think of right now for you lot to test is what is the chance that the previous day equilibrium is tested the next day. Go back and test that. Something very easy to go test. It will take you maybe a week or two to gather 2-3's worth of data. and you'll gather some really valuable info there. So hopefully that answers your question there behind like gathering stats, but it's about like problem solving, writing it down, going back, thinking, why is this, cutting it off if necessary, or adding if necessary. You know, I obviously said I cut off trading London session, but I also added and started trading New York session more. So hopefully that makes sense.
Yeah, no, thank you so much for sharing that and providing that detailed answer. I think it's extremely valuable for anyone listening in. And you can, so just one takeaway here, right? Listen to how serious this is, right? Luckshury just mentioned go back 3 years and collect data over the course of a couple of weeks. You need to be fucking serious about this, right? You can't just, mess around and think you're going to get the results that you think you're going to get by just messing around. Like, you need to be extremely serious about it. So that's, I think, one takeaway to think about from what Luckshury just discussed.
It's extremely serious because, the amount of times I've given people the fruit and gone, look, go and do this. You might find something extremely valuable to your edge. And they haven't gone and done it. They literally came back to me the next week and I said, you're not cut out for this, clearly. Because, you're not doing the work that's needed. And if you're not going to, then there's no point. There's literally no point. That's really important. I can't really stress this enough. And obviously, like, I'm speaking from my point of view. I've seen people that haven't collected extreme amount of data and they're still profitable, but they still have a plan and they still look at their stats and everything like that. They just don't go 3 years plus and doing all this stuff. But I personally think that's necessary because I have seen a lot of people do it. I'm just saying I have seen 1 or 2 people that haven't. So that's what I would say there. But there's definitely that element to it.
Yeah, 100%. And to pivot a little bit into the same conversation, what qualities do you think are key for a trader to be successful? And on the other end, you talk to people probably approach you for advice, and you're an educator as well. Where do you think people go wrong?
I definitely think it's about having discipline. I think it's about having discipline because if you have discipline, you can build up habits. And if you have discipline, I feel like if you have discipline, you can almost do anything. That's like number one thing, because if you have discipline, you'll be very good at problem solving because you won't kind of give up easily. It's kind of like you have determination in that sense. If you have discipline, you'll show up every week. If you have discipline, you'll pick up really good habits. If you're good at problem solving, like I said, you can solve the bad habits. And if you have discipline, you can keep the good ones. It's like, I think discipline is like the number one thing you can have as a trader. Obviously like personality traits, like I think discipline is number one, but then also you got to have like risk management, all this other stuff. But I think that is all it's all built on discipline. You can have good risk management for one day, but can you have it for 10 years? Like, that is discipline to do that for 10 years, like really good risk management. Can you journal for 10 years, not one day? That's discipline. It's habit. It's built off habit, which is built off discipline. So it's like so many different things that, in my opinion, all are built off of discipline. Really and truly, that I didn't think, again, like when I came into this, I'm pretty sure I was thinking like the most and the majority, just, in the way I thought, to an extent of just come in here, let me just trade. And, it really is discipline based. It's not just TA and all this other stuff, 50x, 100x, LARP, if you want to call it that. You'll never hear me say stuff like that, but yeah, it's really discipline based. That's the number one thing.
Yeah, I was just smiling while listening to that because, the way I think about it is look at high performing athletes. Look at their routine outside of when they play the game. It's all, look at the work that's being put in outside of the game that gets played. Look at a basketball player, look at a football player. Those, however, 2 hours or 1 hour worth of time is just a glimpse, right, of what they're doing. I mean, they're putting in all that work behind the scenes. You have to be really specific. I mean, if you look at some of the routines of these high-performing athletes, they're extremely specific about everything in terms of their mentality, what they put in their body, their nutrition, their daily routines, their recovery. And I think trading is the same, I talk about this a lot, motivation versus discipline, right? A lot of people see motivation is very temporary. It's very temporary. You see someone, and we'll get into this as well. We were talking about this offline in terms of how to use Twitter properly. But a lot of people come into this trap of seeing all this engagement like, oh, like I turned $100 into 10 grand in a week, and I did this and did that, and I
Yeah,
really I try to make an effort to explain to people that it's, to stay away from that completely, to
one hundred
filter out all the
percent.
noise, cut out all the fat, like we were talking about the way you approach your trading. I approach life in general like that. Cut out all the fat, filter out all the noise, focus on what you can do today to improve 1%. And you're talking about
Yeah,
this too, like continuous improvement, continuously
like
collecting data, being curious about what kind of data you can collect to find an edge. So yeah, that's all. That's my 2 cents that I wanted to add on to that.
no, 100%. I couldn't agree with you more. Like, why is the space normalizing 50xing or 100xing an account in a week? Why is the space normalizing that? Because all it's doing is like hindering trading performance. Like that's not the aim. I think that's something as well that I think the majority fell into, is that like thinking that you can 50x, 100x is like normal. Why not try and aim for 3% a week? Just think about that. Not even 1%. Everyone goes 1% a day. Try 2-3% a week, not even a day. Because now let's think about that for a second. Even let's just 2%. That's 8% a month, roughly. If you can get 2% a day, or 2% a week, that's 8% a month, right? Which, in my opinion, obviously depends on your account size, is still a healthy amount. Obviously, you should be aiming for more. That's like bare minimum. I'm saying like 8%, 8%. That's fine, but you should be aiming for more than that. But like normalizing 50x, 100x within a week is literally putting a hindrance on your trading, and is why people want that instant gratification. It's because people are normalizing gambling. This is not 50x, 100x. The community in that sense is just normalizing gambling. Trading is literally that slow. You're looking for that distant grind, like we said, that longevity, that we're looking for, looking at that down the long path and not going for that instant gratification. Journaling, etc., etc. If you want to be in this for the long game and you want to do this for an actual living, this is the way I look at it. I want to do this for an actual living and not like the next 2-3 weeks. And the reason I did that was because at the time I wanted to prove to my parents that this is not just something short and it has to be done in the long term. So I started proving I have to do this. At the time it was like I have to perform X amount a month and not just waste everything trying to hit 50-100x. It was journaling, improvement, 10-50% monthly gains if possible, some months down, some months up, and trying to consistently hit on that on the green months and negate the red ones. So I just get annoyed that the majority of the community normalize gambling, and then that most people just they full flock to it.
Yes, and I think there's a huge psychological aspect to the space as well. I mean,
Mm,
we can talk about leverage, right? I mean, the issue with leverage is people don't understand what it's actually supposed to be used for. It's supposed to contain your exposure, not get overexposed on your portfolio, right? And
exactly.
people using it in the opposite direction, and I think most of it comes from just the general aura of the space being, after the COVID situation and the run up where people made millions of dollars, people made a lot of money, but they lost it at the same rate. I personally know a lot of folks that made a ton of money and lost it all. I've received DMs from people running up their trading portfolios and running it back all the way down to zero. So as you're talking about, for it to be a sustainable, for it to be a sustainable endeavor, it needs to be increments. You can't be shooting
Yeah.
for home runs. You can't be hitting for home runs.
I actually was talking to someone that I'm teaching. Well, I just go through, and I do that because it actually helps me as well in a lot of senses, about reminding me of fundamentals and everything like that as well. But I was teaching someone, and he actually risked, I believe, he got liquidated on an account. And this guy has a lot of money, and we just brought him down to a much smaller account so we can just see how we can manage it. And I said to him, you realize if this was done with a much larger account, he had lost hundreds of thousands at the time, that if you had done this with a much larger account, you'd be down $300,000-400,000. And he was like, yeah. And I was like, we can't ever allow this to happen again. Like, all it takes in this business is one off day like that. Luckily, he's on a smaller account. Obviously, the monetary value of being on a larger account, he might have not done the same thing. But all it is the same percentage decrease again on a larger account. And all of a sudden, you're down 300-400 grand, or you're down like 2-3 years worth of work because of one day. You have to be able to have the discipline to be able to not, I think that's number one thing to survive. You need to at least be able to survive, and to survive, you need to be able to have impeccable risk management. faultless, not be able to miss a single day where you go outside your risk parameters, where you get liquidated. That should never ever occur, in my opinion. Never ever occur. And if it does, I don't, and then you're in a really tough situation if it does occur. That's all. I think you really have to step up from that stage.
Yeah, 100%. And that's why it's so challenging, right? It just takes one slip. It's a constant battle. It's not just,
Yeah.
okay, you had this down. And that's why it's so humbling. Like you deviate from your risk management strategy, it just takes one time and it's over. Like you could get cleansed out.
Literally.
And unfortunately that happens to a lot of people. I mean, recently, if with the flushes, and like I've seen a lot of people lose their portfolios. It's really unfortunate, but that's why it's so difficult, right? And I think to get into a little bit more, I've seen people be extremely disciplined in other areas of their life. They'll work out, to have a disciplined routine, but when you throw in the factor of money, it's just a whole different game.
Yeah.
Psychologically speaking, it just introduces this other dimension that really changes the way you think. So I think getting a handle on that, some people just have it naturally. Some people have the mindset of approaching it, like I was talking to my friend Sku, and he looks at it very zeros and ones, like in a very binary manner. And then there's other folks that have a very difficult time looking at validations and invalidations. So I think maybe it's a little bit more work for some folks compared to others, but regardless, it's a constant battle that you need to go through every single day if you want to be trading.
Yeah, I think there is this difference in a slight manner that if, for example, you're very strict in your regimen of like eating healthy, if you have one day where you eat junk food and everything, it's not going to kill you. If you have one day in trading where you fuck up your risk management and everything, it could very much well be the end of your trading career. So it's like, how disciplined is discipline? Like, obviously we can stick to like a workout routine and everything, but are they hitting the same? Are they not eating junk food at all? Or, like, how strict are they with it? Because that level of strictness really comes to a different level when you're coming to trading, because you can't afford any slip ups like that. Not a day, you can't afford that. You can't afford your mind to wander off into that space. So yeah, it's super, super, super important to mention that. That there's a slight difference there, I think. And it's just like not the actual discipline part, but like the actual level of it. How disciplined is discipline, and then going from, especially within the trading, it's like on a different level.
Yeah, you bring up a great point. I think it just takes discipline to a whole different level. And yeah, it's crazy that we've been talking for almost an hour now. We could probably go on for another 2 hours, to be honest. I might have to bring you out again. I don't want to take up too much of your time, but I want to pivot a little bit. And so people get a glimpse of, get to know you a little bit better as well. Do you have any insightful stories in terms of trading, like when you're experiencing a drawdown and sort of how you came back from that? And also, like, if you would like to give any advice to folks that are going through drawdowns and or consecutive victories, because I found pretty early on, whenever I was profitable consecutively, while journaling, I always, not always, but typically, it was a higher chance of me fucking up and, loosening up a little bit on my risk management, right? And that first loss would lead me to a series of smaller losses. So that's what I noticed. You talk about the importance of journaling. So I had to really fix that when starting off. But what advice would you give for folks going through, drawdowns, and how do you approach that?
Well, there was a time where I went through. I lost $8,000 in a single trade in like the the early stages of my trading career. And that was a big lesson. Big. It was like $7,800 if you want exacts here. And the lesson to that was, I'm not ready. I wasn't ready for that. So I literally just I didn't start afresh, because I was starting with like $9,000 account at the time, because I was doing accountancy as an apprentice. The pay was actually okay. It was solid. But it showed to me that I wasn't ready, because that can't happen. And that's like the only time I've been liquidated. And what happened from that point onwards to bounce back was I took $100 account. And I was like, I need to journal with this account, journal with it, and I'm not going to scale up until I'm ready, right? And ready was 5.5 months of profitability to then go, okay, I'm ready to jump onto when it came to the 6 month time, I'm ready to now jump onto like a larger account to try this out once, 5 months of consistent profitability at that stage. So, and what I mean by that, this is something as well to mention from that point, just kind of mentioning that I didn't go, I'm going to turn this $100 account into 10 grand. I didn't say that. I said, I'm going to, aim for 5 to 10% on this account each month for 5.5 months consistently. Not I'm going to 100x this account or whatever, because I think that's the mentality people look at it. I literally took it and was like 5 to 10% increments, because again, you don't, obviously you can double an account and whatnot, but I'm looking for increments where I consistently manage my risk, because then all I need to do is mirror that same effect with a larger account. And that's the way I did that. Like bounce back from it was like I slowly had to rebuild from a much smaller account to prove to myself that I was ready, in simple terms.
Yeah, I believe that's great advice. Understanding when you need to take a step back and size down, and also the percentages that you're discussing. Not going for to swing home runs. I mean, that will
Yeah.
always get you in trouble. It might work out. What I've seen is it works out for people in the short term. They might make a ton of money, but then it's just using that same loose risk management and swinging for a home run causes people to get liquidated as well as fast as they run the money up. So what I want to also talk to you about is what does a typical day look like for you, and what's your routine as it pertains to trading?
I wake up at 6 a.m. Actually, like 5:55. I kind of have like a kind of fairly regimented morning routine. From when I was younger as well, it's kind of the same thing. So it's like 5:55 a.m. wake up. Gym is like very close. 6 o'clock. So I get to the gym for like 6:05. Do my workout, do swimming, all of that stuff. Come back. Then I do my morning routine on the chart at like 8, 9 o'clock after I've done everything. Which I've eaten by that point as well my breakfast. Sometimes I'll fast till 12, and then I do morning routines complete at night. 8, 9 o'clock, because again, I don't trade London session anymore, so it makes it a lot easier for me to do that whole morning routine without the fuss of I'm missing the move. I don't trade London through stats that I've gathered. Then 11, I do my DRC, the morning prep, and then I have a section at 11:30. So that's 30 minutes before my New York Open time for me, where it's called the New York pre-New York prep, which is like it's got my pre-New York checklist. I go and reevaluate my levels. Do I need to change anything based on the last 3 hours worth of price action? Might do a little bit of outside walking just before, like 3-minute outside walk, because I kind of want to recalibrate my brain before I start any sort of trading or execution. Something I've learned the hard way. Again, a very small difference. Then from 12 o'clock my time, so 12 p.m. Again, I'm UTC 0, so London. From 12 o'clock till 6, 7, 8, I'm trading, monitoring the charts, not really doing anything else apart from that, apart from the occasional post on Twitter about my thoughts or whatnot. And then I'll have dinner around 6:37. And then kind of anything beyond that is kind of my free time, where sometimes I'll go football. I'll go with my girlfriend on the occasion and stuff like that. And then on the Saturday and Sunday is very different, where I do like a weekly review through all the data. Okay. I'll also then go through all the different problems I came up with through the days, through the whole week. Did I have anything I wanted to test out? I did it on a Saturday and Sunday, get that started. And that's about it. I actually do start my trading week doesn't start on Monday morning. It starts Sunday close session. Again, something I've learned through my stats is Sunday close session is very good for me to trade, and Monday Asia session. So that's kind of when it starts, like Sunday afternoon, evening. Saturday is really my only day where I'm like hardcore stats and not trading. Sunday afternoon, evening, I'm starting to get back on the charts again and go from there. So hopefully that gives you a rundown of my day/week, if that makes sense.
Yeah, thank you for sharing that. That was extremely detailed, and I think it just gives an insight to how regimented you are. And I've seen this theme fairly commonly. I'd like talk to a bunch of different folks and try to find a common theme, right? And I think this is a common theme, like having some form of a routine, right? Having some physical activity
Yeah.
and managing your time and prioritizing certain things and having some form of a balance as well.
Yeah, exactly. I couldn't agree more, to be honest with you. Um, like the routine part. Again, I didn't just randomly start trading and have all of this. It's built up over a lot of time.
Right.
And the number one thing I could recommend to people is to have a routine, have a plan, have a journal, all of that stuff. Honestly, is extremely important.
Yeah. Thank you for sharing that. And we've kind of we've kind of touched on this, but how do you manage stress? Like what do you do when you have to take a break or reset?
Um, that's a good question. And the first part of that is I have to recognize that I'm stressed. Um, because a lot of the time I don't really realize it, and I just go, you know, start trading. So I have to recognize I'm stressed, and I kind of like ask myself a set of questions. Going through that, like, how do I feel emotionally? Has something or someone around me, influenced me in a negative way? How have I lost in the last few days? Has something negatively impacted me to make me feel stressed? Um, After I've got to the point of if I am stressed, yes. Okay, so the answer is yes, I'm stressed. I won't trade that day. Guaranteed, I'm not touching the charts. That won't be good. Um, I'll generally just go and relax. I think most of, I'll go for a walk. I like my walk. I'll go for a walk and I'll go, play some football with some friends. Um, Probably, go sauna. But I really try to relax and try. I think there's something that's changed a lot in my demeanor over time is that I'm very calm, and well, I like to try and stay calm. Even if I'm annoyed or stressed or whatever, I try to think about the positives and try to calm myself down again, because getting angry or anything or annoyed isn't going to help my performance or me as a whole. I talk about trading performance, but I'm also interested in my own performance as an individual. So like I have to, ranting, raving isn't going to improve all of that. So I have to kind of step away from everything outside, not trading, anything but trading. Trading really will really ease my mind, to be honest.
Yeah, no, that's you bring up some great points, and I was going to ask you about this as well. Is staying
Mhm.
level-headed? Is it sounds like you were telling me earlier as well. It came with trading over time, where you kind of understand the importance of managing your emotions and how to go about releasing them in an effective manner, understanding how you're feeling if you're stressed. Because you're a numbers guy. I don't know if you use a Whoop band or I have an Aura ring, right? And
Mhm.
so I track those metrics, and it gives you a really good sense of. It kind of takes like the how do I feel part of the equation, because I also struggle with this because I definitely work a lot. Like I go out of my way sometimes, and it's not because I do it on purpose. It just
Mhm.
happens. So I use an Aura ring, and it basically tells me all the metrics in terms of my heart rate and what kind of stress levels I might have. So might
Yeah.
just my suggestion if you look
No,
into it, if you don't have.
definitely. The Whoop band and stuff like that looks like really awesome. I actually have currently been using my Apple Watch. Um, but I definitely
Okay,
need to look
perfect.
into.
Yeah.
I've been definitely looking into those bands. I think that was something I was actually looking at yesterday or the day before. I was looking at getting one because of a podcast I listened to. They had it on there as well, and they were talking about it, and it was like looks really good. So I was thinking of giving it a try. But since you verified it, I might as well go and do that. To be honest.
Yeah, I believe you'd love
Um,
it because it gives you like a very unique metrics in terms of your sleep and everything, and it really, I've learned a lot about my body and what can impact certain things in terms of my sleep, because sleep is so crucial. The
yeah,
heart rate
definitely.
and heart rate variability, all those kind of things. I think you'd really like it.
100%. That's definitely something I'm gonna have to look into now.
Awesome, awesome. All right, so we're
Yeah.
coming up on the last end of this conversation, even though we could probably go on for hours. But what
Yeah.
advice would you give to someone who has just started trading or is in the beginning phase of their trading journey?
Don't let someone online influence your next trade. With that said, take advice from from people, in the sense where it will affect your mindset, your preparation, your post market reviews and stuff like that. The number one thing I would say to you is like get a journal, start journaling, self analysis. Um, Learn to be able to sit on your hands and miss moves even when there's extreme volatility. We're recording this now when the ETF kind of thing's been going on, and like I know for a fact that everyone's really trying to get involved on like trading this, trading that. Like, try and sit out of like trading. You don't need to trade every single pivot, high pivot. Like, I think there's something so important that I learned is that I don't need to trade every single pivot. Right, I trade what is best for my edge, what fits my edge, what fits my plan, what fits my routine, which fits my bias and such. Right, so yeah, I would definitely recommend doing that, and I just recommend learning self discipline, creating that routine. I honestly, and then think about it, just like building time apart from that. It's crazy that I'm not sitting here with like 1,000 different things to say about like what you should do as your new beginner, but the things I'm mentioning are very kind of difficult to do. I would say, it's not the easiest thing in the beginning to create a routine, to create discipline for that routine, and to create a new habit in that sense. But that's what needs to be done to get into the boat of profitability, in my opinion. Alongside that, you must have impeccable risk management. So like definitely risk management, journal, routine, plan, the very generic stuff, I would say, but the most important.
Agreed, and I think that's so important that you mentioned that. These things are, it's easy. They sound easy, right? But I think as a beginner, you get pulled in 100 different directions. It's pretty difficult. So putting in work in these areas I think will be huge for anyone starting off and anyone listening in. And what I want to ask you is, I know you're not that active on Twitter per se, but do you have any Twitter account recommendations, and also any book recommendations that you might have in terms of trading? And along the same lines, I'm going to make this into a two-part question. We hinted at this earlier. How do you think people should use Twitter if they're a trader?
So there's one book which I resonate. I want to, instead of like giving you 10 books to read, I want people to read one book, and it's Best Loser Wins by Tom Hugard. I think that's how you say his name. Probably been recommended before, book. But phenomenal insane book. And I would definitely recommend reading that book. Did you ask for the accounts and then how I would use Twitter? Like, was that?
Yes. If you have any account recommendations, and also like how would you suggest people to use Twitter? Because there's so much noise on there, and how would you suggest using?
Yeah, so like people to follow on Twitter. Stoic yourself, of course. I would also put on there Trader Dante, 100%. Let me see who here as well. I would recommend Abe Trade as well. Trading Right. Let's see. Is there anyone? Emperor BTC, Leviathan Crypto, 100%. Trader Motive, and I won't say that one actually.
I might know what you're talking about.
There's a few that I follow that I would say I'm gonna keep it short. I would actually say Nick Algo as well. I like Nick Algo. Yeah, and really one more. Really I got one more actually. One more final one. I think is very good for people to watch the upcoming journey of Exotic Trades. Yeah, I follow him, so you'll be able to find him there. Exotic Trades. He's very, very good.
I'll definitely keep, make a point of that as well.
Yeah. But aside from that, how would I use Twitter? Well, I'd use it to look for I think most people go on there like sporadically and like looking for what they should be doing next. People go on there when they're kind of desperate for an answer on something, and I don't think that's when you should be going on there. Try and set dedicated times to go on Twitter, to go and view like specific educational content and review that, and then find a way to implement that into your own trading. Like I see, I've kind of built up this kind of resistance, I feel, to like whatever anyone says on Twitter. Like I instantly like can deflect it because like, I know it's not going to affect my trading. Whereas I know a new trader might like see something and be like, I'm going to do that now, and like really, I'm gonna long now because this person said this. Like definitely take time away to think and find educational content rather than just aping in based on what someone says. Try and find like nuanced or special advice in nuanced areas, like order flow, price section, stuff like that, order book, like Stoic post as well, like, volume profile stuff, everything like that. Go through, review that in dedicated hours rather than just, like I said, sporadically entering when you need an answer. That's what I'd say to that.
Yeah, such a great answer. And I think the goal is to develop your own, collect your own data, develop your own edge. You can take frameworks from other people, right? And try to incorporate it and see what works for you.
Yeah.
But at the end of the day, it's important to develop your own thinking and way of looking at things. If you're just copying, copying someone is not going to end well. It's not, first of all, it's not sustainable. You don't know what their, everyone's portfolio size is different. And then it's Twitter. You don't know who's doing what. You need to develop your own system, your own methodology. Like you said, you mentioned some great folks. You can take their frameworks and kind of work in, data collection, as we've basically talked about during this entire episode, and come up with your own system.
100%.
And you mentioned Motif. I'm hoping to get him on soon. I've already talked, so I'm gonna get him on as well soon.
Yeah, 100%. I'm sure he'd be down for it 100%. Like, he's a really great guy.
Definitely getting him on soon. I'm in talks with him, so
that's
I
good.
think that'll be a great discussion as well. But is there anything else you want to plug? I mean, we're reaching an hour and 40 minutes, and it's been such a refreshing conversation, to be honest.
It's been awesome. I've really enjoyed it. Nothing really to plug. I mean, obviously, my Twitter's at Luckshury the Next Iranian. I've got a free read-only Discord again, with all my templates and workspaces for exocharts, where you can go and collect them all if you want and use them. I'm in the exocharts Discord. I'm in that Discord. It's read-only, but you can see all my, gather some content there. I'm also on YouTube, where I've got a ton of stuff there, again, all for free. But if you do want mentoring, again, it's like an application process. I don't really want to. I won't plug that, but if you're interested, go find that if you want. But most of the stuff there is like, it's free. Everything there is free essentially. But if you want to talk to myself like on a one-to-one basis regularly, you can apply. But I only really select certain individuals. Otherwise, things can get quite bad if you've got the right mindset, and I take you on. So, yeah, that's kind of all I'd like to say. But it's been a pleasure, mate. Really.
Yeah, I really enjoyed this conversation. Thank you for taking the time for sitting down. We were planning it for a while, but both of our schedules in different time zones, and holidays and New Year's. It's crazy. It's been crazy. But I'm really glad we got to do this. Hopefully, but maybe we'll get you on again, man. I think we could talk about a lot of different things.
Oh, there's so much more we can go over.
Yeah.
Yeah, 100%. So much to go over.
Yeah, so anyone who's listening, thank you for tuning in, and stay tuned for the next episode of Perpetual Perspectives. Hope this conversation was as enjoyable for you to listen into as it was for me to have with my friend Luckshury. Until next time, we're out. Thank you.